Hey guys, this is Bruce Marshall from Simpler Trading with the nightly video update for Wednesday, June the 19th. And today was an exciting day. We have been waiting and waiting on this. I did the videos on Monday and we talked about this could be a big market moving event. It turned out to kind of not be. And that was actually expected from what the Fed was going to say, because we went into this Fed meeting with about I think it was ended up being a 22%, 24% chance of a rate cut or something like that. So it was a low probability of a rate cut. But the thing that we talked about on Monday, if you watch the video I did on Monday, is that the market was likely expecting a rate cut, and depending on the language, the important thing was the language of the Fed around the rate cuts. So even if we didn't get a rate cut, they needed to be very dovish, and they were. And now our probability of a rate cut for the July meeting, which was expected, is somewhere. I've heard two different things. I heard 87%. I read 87% earlier, and somebody in the room actually told me that had dropped some. And if you read the language of the Fed from the dot plot that they do, they're projecting only one rate cut next year. So market's not going to like that. But overall, the reason we didn't get a rate cut, and again, we weren't really expecting a rate cut, but the important thing was the language, is that, and I mentioned on Monday, is that the economy is strong and the data does not support a rate cut, right? So, not yet. Inflation is actually dropping, and things are looking pretty good. So they're going to hold off, as long as they can. So overall, this is pretty good for the market. And I do think we go higher. We've got quite a few outliers. We've got a lot of political things going on. With Trump and Powell. Trump appointed Powell, and now he's not happy with what he's doing and all that. So we've got that. I don't think that'll actually ultimately turn out to be anything, but could put some pressure on the market. We've obviously got China, the G20 coming up, and could be really good news from there, or not. So we remain in limbo, of course, again, with lots of different things going on. We've got an evolving situation in Iran and also North Korea. So I mean, there's always things, wall of worry type things to worry about. But any of these can give us a knee-jerk reaction. But ultimately, I think we probably do go higher. But that being said, let me get over here and we'll look at the S&P and kind of clarify this real quick. So real quick for today, this is, we chop into the Fed. This was the actual Fed announcement. That's at 1 o'clock. And we initially, we were at 29.18. This is S&P. 29.18 up to about 29.30. We got a 10-point move higher. That's pretty, if you go back and look, that's pretty standard. And then it fades, and that's exactly what happens. Or happened here again today. And then we started chopping, and then we started getting in this, kind of run into the, or not run, chop higher into the close. So, all in all, it was really pretty quiet, honestly. I think we ended up closing up, about 6 points or something like that. Let me check real quick so I can, 8.71. So anyway, back to what I was talking about earlier. Let's go out here on a little bit longer time frame and take a look at this. Of course, we looked at this, I think, on Monday as well. So a couple things. We've got, this is the all-time high here, 29.54. And, of course, we've got a big snow line right here that we're right up against now. Do we get through that? And if so, right on the other side of that is and that snow line is at 29.30, 29.29. So 29.30 essentially, and on the other side of that is, of course, the all-time high. Do we get through that? So we've got multiple levels of resistance right above us right now, And I think the biggest chance for, a meaningful push higher was today from the Fed being overly dovish or even possibly a surprise rate cut or something like that. We did not get that. So I don't know that that we immediately go higher. Also, if you look at history and market trends and so forth, the Trader's Almanac, and I have to thank Henry, he pointed this out today, that Friday is our triple witching. I believe it's quad witching on Friday. And historically, the week after triple witching, the market is down 20. Has been down 25 of the last. Says down 29, 25 of the last 25. Average loss since 1990 is 1.1%. So going all the way back 29 years, right? So anyway, I mean, historically, that means we go lower next week. So we got to be aware of that. But the point is here that whether we go higher and pull back or go lower and then rally, I think we ultimately probably continue on this. And the reason is the Fed and the likelihood of rate cut, whether it's sooner or later, and do we get more than one, that type thing. So, be I'm expecting in the short term, we possibly might pull back tomorrow, chop around. Friday typically on expiration is typically an up day, and then next week typically a down week. So I would expect some weakness, and let me zoom in real quick here. And I would say, just generically speaking, there's 2,900. That would be real easy to pull back to there. That's with an expected move of a day or two probably, but we could pull back all the way to here and it wouldn't be out of the norm, So be aware of that next week and always look at what's right in front of you and then kind of keep a big picture view, but also stay nimble. So that's what I've been trying to do. So again, I just want to focus on the S&P right now and the general overall view of the market. We have a little more clarity, but not as much as I was hoping to get from the Fed or the market reaction for that matter. So now we take it one day at a time and go from there. So I hope this helps, makes sense, and thanks for the time, and I'll see you guys at the next update. Take care.